morning from our global headquarters in New York. I'm Menace Craney, back alongside Danny Berger. Welcome to Bloomberg Brief. Let's set that agenda.
Bracing for volatility, uncertainties around earnings, geopolitics, and the U.S. election keep markets on edge. A red line has been crossed. Israel doubles down on its plan to hit Iran after an assassination attempt on Prime Minister Netanyahu. And Boeing and its workers agree on a tentative deal with another vote scheduled alongside its earnings this week. Good morning, Manus. Great to be back with you.
Danny, good morning. Good to be back with you. This is the state of play. 6 weeks of gains, up 1% last week in the S&P 500, 47 records in a row. I went on holiday and you just kept cranking them out. Red sweep fever took hold. It is 2016 redux in terms of small caps and the dollar. By the way, Goldman Sachs say you need to just get a little bit calmer about the returns that you're going to expect over the next 10 years. Those heady days of 13% maybe in the long grass. Roll it over. Have a look at the bond market. Predict it now, have a 56% probability of a Trump win. And a red sweep moves to 42% from 28% on poly markets. And that has implications for the bond market, for the fiscal largesse, etc. of Trump relative to Harris. T. Rowe Price say 5%. We're going to hit 5% on 10-year government bonds. Danny, why? Because deficits flood the market with new supply. Boeing, have a look at that. Pay deal, will they vote it through? On Wednesday, the stock is up on just under 4%. The vote is set for Wednesday. Will Kelly Ortberg deliver the 35% pay deal with the unions? Good morning, Danny. I was watching you every day on holiday.
Yeah, how'd I do?
You did brilliantly. Came out of the elevator, there she is. Huge screen, and she's in full techno glory, and you go, I'm on holiday.
Basically, when you're gone, Manus, my aim is just to not break anything. For you to come back and for things to be in one piece.
Perfection.
They're not only in one piece this morning, Manus, it feels like this weird sense of calm. Are we in this eye of the storm? We're going to have big tech earnings kicking off next week. You have an election in 2 weeks. Is this just the calm before chaos? We're going to talk to Lori Calvasina later in the show, and I'm so excited to speak with her because she says basically the most important thing for this equity market is just to get past the election and know what's happening. That's what's important.
And this goes back to the sort of sentiment. And we'll play it for you in just a moment from Carson Block, which is like hold your nose and sort of just get through it. We've got 20% of the S&P 500 reporting this week. You're going to get Tesla. You're going to get Boeing with that pay deal. But my favorite line goes to JP Morgan. This is an economy out there which is aging backwards and extending. Macro vol at a 2-year low. It's a beautiful phrase, aging backwards.
A Benjamin Button economy,
I seek to do this every day. I seek to do this every day. Look, we're talking about the Fed. We're talking about the beginning of this cutting cycle. And investors are divided on how it might last and what is the best position. Let's take a listen to the Muddy Waters Capital founder, Carson Block. This is what he had to say.
There's a Fed put. There's always a Fed put. You know, does there come a point in time when the system breaks and the Fed can't fix it? Theoretically, yes. In our lifetimes, I don't know. So I think for now, it probably just pays not to think too much. Just close your eyes and buy. Probably Mag 7.
Now, that is music to Marija Veitmane's ears, Senior Multi-Asset Strategist over at State Street. Hold your nose and buy big tech. Why not just buy big, Mag 7? Marija, good morning to you. Is that where you are at the moment, 15 days out from this election? Hold your nose and get through it.
Good morning. Yeah, I would probably say not just 15 days, probably last 15 months, or I mean, you can take it longer. We love tech. That's the area of stronger earnings, and that's what investors are focused on. Yes, elections are coming, but realistically, what investors are looking for is Fed put, corporate earnings, U.S. labor market. So those are far more important than kind of political tensions.
Marija, just to take a step back, we're up 23% year to date in this S&P 500. Manus keeps mentioning how it's record after record. Even the most bullish might be surprised to know that that's where we are. But we've had basically a month of really strong data. Marija, how do you disaggregate between what is worthwhile gains and ones you want to continue on versus gains that are just so robust it gives you pause?
Yeah, I think, Danny, you're right. Kind of, in order to make sense of this market, you have to take a step back. And basically, what do we have? We have economies that is not collapsing, corporate earnings that are still positive, and we have a very supportive central bank monetary policy from pretty much every central bank in the world. So I think that kind of means that stocks need to go up.
And that is supported by the growth numbers here in the US as well. You look at the Atlanta Fed's GDP revised to 3.4%, Maria, in this quarter. And then I look at European data, and it is crashing down. Again, just reinforcing you must be longer of the US relative to Europe.
Yeah, no, definitely. That's definitely true. So in US, like you say, you have still robust growth, both corporate and economic growth, and you have very kind of aggressive central banks that wants to do everything to avoid recession. While in Europe, I mean, arguably, parts of Europe are definitely in recession. And ECB, I mean, they're cutting interest rate, but they're really not kind of pounding the table where we will do whatever it takes. So yeah, definitely preference for US over Europe.
Marija, there had been hope that China would not only save Europe, but much of EM and make Chinese equities themselves attractive again. It's this hype-up cycle where we wait for China to deliver more policy. They deliver a taste, and we say it's not enough. Marija, does the rally in China and the corresponding equities that matter with it, does it have legs?
Yeah, so what we've seen in China, which is really interesting, is that institutional investors from State Street custodial database, they are buying Chinese stocks. I mean, they're massively underweight, obviously. And they want to buy Chinese stocks on kind of first announcement. But as the kind of drumbeat of this announcement is slowing down, we see the flows is petering away. So it feels like institutional investors need more stimulus, more announcements. So far, knee-jerk reaction was positive, but you definitely need more. And what Chinese authorities really need is to get consumer to spend. And so far, we haven't seen any evidence of that.
And this is where you say the consumer is bruised by years of common prosperity. And so if you look at the cuts today, the 1 year and the 5 year loan prime rates, they're sizable. But is that enough to materially draw you in? What is it that would shift you more towards China?
I mean, we know consumer sentiment is very weak. So consumers have not been spending. So it has been more of a kind of, it's not like a supply problem. I mean, money have been kind of getting progressively cheaper and credit is available, but people just not spending. So it's more like a demand problem. People are not borrowing. So you can lower cost of borrowing as much as you want, but if people don't want to go out and borrow, that's a challenge. We know property market is overextended, and that's creating problems for local authorities, for people to invest. Youth unemployment is big. So those structural things, that's really difficult to address, and that will take a long time.
So in other words, you can't buy China, Marija?
Not yet. And actually, on another point, China proxies as well quite challenged. I mean, in Europe, we all love to think about like European luxury goods had been supported by Chinese consumer for years. Again, that's really not happening. So yeah, we will be quite cautious about that as well.
Marija, this market is caught somewhere between trying to protect themselves from a contested election through to this slight mania about a red sweep. My question to you is this: how much of this red sweep narrative will impact technology? You are long technology. You've been long technology throughout the past 15, 16 months. What's the worst case scenario for you in a red sweep with tech?
I think red sweep, sweep as a risk. Yes, that's definitely true. And actually, to my mind, kind of market somewhat constructive attitude or kind of resilience in light of election is that kind of the expectation is that there still would be kind of shared power between Democrats and Republicans. And we see red sweep increasing in probability. I probably have to say that betting markets there are very illiquid and can be influenced by like a small number of players. So probably, it's quite skeptical about the red sweep or any sweep for that matter. So I think the shared power is probably still the most likely outcome, and hence kind of watered down regulation.
Yeah, and those poly market things, they're just driven by whales. Really hard to get any sort of read for them. Marija, thank you so much. Marija Veitmane of State Street this morning. Manis, let's get to some other top stories that are trending on the terminal this morning. Over the weekend, Boeing and its union have proposed a new agreement to help end the strike with some help from the White House. It includes a 35% wage increase over 4 years, a guaranteed annual bonus of at least 4%, and an additional $7,000 bonus if workers approve the contract.
The International Energy Agency says the global oil demand will continue to weaken due to the slowdown in China and the rapid intake of electric vehicles. The executive director told Bloomberg prices are vulnerable to some spikes, though there will be no problems with the availability of oil.
MetLife is in advanced talks to buy Pine Bridge's non-China assets. It's a deal that could be valued up to $1.5 billion. Those talks are exclusive for about $100 billion in assets under management, all of that according to people familiar. Deliberations are ongoing and no final decisions have been made.
Coming up in the show, brace for retaliation. Israeli cabinet meets overnight to discuss its plan to attack Iran. More on that next.
And Manis and I are going to be catching up with Lori Calvasina of RBC about where the risks are from the election and everywhere else. This is Bloomberg. It's your Bloomberg Brief on this Monday morning. Danny Berger and Manis Cranny in New York. Israel's Prime Minister Benjamin Netanyahu has met with top security aides to discuss retaliation against Iran. The meeting comes after a Hezbollah drone penetrated Israel's air defenses on Saturday and exploded next to Netanyahu's private home. Let's go now to Bloomberg's Dan Williams in Jerusalem. Dan, no one was there at Netanyahu's residency, so no one was injured. But how did this even happen? How did a drone get so close to Netanyahu to make a possible assassination attempt?
That's an excellent question. I'm sure it's being studied very closely by Israeli military experts, experts on aeronautics, experts on the drone technology available to Hezbollah. I think it's beyond doubt that Hezbollah, certainly over the last month or 6 weeks, has really found itself on a back foot militarily, given the surprise and precision strikes on a very large scale that Israel has subjected it to. However, it has managed to adapt, and it appears to be combining drones in small numbers with smaller or larger numbers of rocket strikes at the same time in a bid effectively to spoof Israel's air defenses, to preoccupy Israel's air defenses with larger swarms of rockets, with groups of drones in the hope that one drone can get through to the target. We saw this just a few days ago with a drone that reached into northern Israel, into an army camp, and killed 4 soldiers in the mess hall as they're eating dinner. And over the weekend, as you noted, this one drone out of 3 apparently that managed to reach the residence. So very low tech, being used with a high degree of ingenuity. The Israelis say that they are racing to produce countermeasures. A minister said the other day that he expects Israel, along with the United States and China, will be one of the 3 leading countries in drone countermeasures. But for now, it appears that the Israelis have really been taken by surprise when it comes to this specific tactic.
Dan, obviously, the foreign minister said another red line has been crossed. You know, the question that goes through the mind is to what extent it can recalibrate, if at all, the response from Israel. But there's also another more pressing issue, which is the apparent leak of the Israeli attack plans at the Pentagon. Just how difficult is this for the Americans to explain away?
Israel has been very careful about not discussing this in public. I don't doubt that they're taking this into consideration on the assumption this is a genuine leak of a genuine war plan as seen by the United States. This would be a breach of Israeli security. Presumably the Israelis would be wondering if this was happenstance, if it just happened to find an interested party, or if perhaps someone within the administration chose to put it out there in order to put a dampener on Israel's preparations. Now, to my eye, from what I saw, this was sensitive information. It did not appear to touch on whatever hair trigger specific preparations Israel has for Iran. But I imagine the Israeli planners are thinking, well, if this got out, what else might already have gone out? And to what extent might it endanger our pilots? They might also be wondering if this is a time-limited leak, in the sense that whoever put it out there is perhaps trying to push off Israel's retaliation against Iran until after the US election, after November 5th. So at least to neutralize any prospect of Israel's retaliation, the Iranian retaliation for that retaliation, destabilizing the region and having an impact on the US election. So a number of questions will be going around on this, but it's worth remembering that in recent events, high-profile Israeli attacks, the Israelis informed the Americans in very, very short order, very close to the actual attack, perhaps as it was already underway, that could be a sign of a lack of trust, or should we say, a very high level of information security, operational security on the part of the Israelis. Presumably, they will preserve that, maybe even enhance that, should this promised attack go ahead.
Dan, it just speaks to the complicating factors behind a retaliation. Only about a minute here, but what do we understand about what that might look like?
Again, it's anyone's guess. We have the Americans signaling that they don't want nuclear facilities in Iran hit, or the lifeblood oil sector of Iran hit. The Israelis saying they will not be bound, that all prospects are on the table. I expect, they say, it will be painful, it will be immediate. It may also be subtle. It may not necessarily be in Iran, perhaps assets outside Iran. I imagine that we will not see a strike on the nuclear facilities or the oil facilities, given that Israel's chief ally has come out so pointedly against that target set, at least.
Yeah, you just reflect on Eli Cohen's comments, the energy minister. No facility, military or civilian, nor any person in Iran is immune. So that calibration is yet to be fully understood. Dan, great reporting. Dan Williams in Jerusalem. Coming up this Monday morning, the Donald at McDonald's, the Republican presidential candidate, serving some Big Macs in Pennsylvania. Context matters. We'll give you the story. Good fry action. It is Bloomberg Brief. I'm Melis Graney alongside Danny Berger in New York. Time for your front pages. This is what's making news headlines around the world. First up, you've got the Washington Post leading with the former President Trump banning the fry station at a drive-thru at McDonald's in Feasterville. That's in Pennsylvania. Now, he didn't answer any question on the minimum wage, instead promoting his unsubstantiated claim that Kamala Harris never worked at the burger chain. The restaurant was closed to the public during Trump's visit, and the motorists who came through for their fries and Big Mac and milkshake, they were screened by the U.S. Secret Service.
The highest security ever to try to get McDonald's.
Mac and fries.
I would just give up. I'd be like, I'm not going through Secret Service to get a burger. Okay, anyway, next up, Reuters has this. The Moldovan president facing a setback, even though that the referendum to join the EU was approved. The issue was it was such a slim margin. A consistent majority had been shown in the former Soviet Republic to back the accession, but when it actually came push to shove, they only approved the vote with a 50.2% majority, according to the prelim results.
That is what you call slim at the margins. Right. Bloomberg leads with the AI search startup Perplexity. It's in early talks to raise funding again from investors. Valuation price tag around $9 billion. The company is seeking to raise more than $500 million in this funding round. Perplexity, what do they do? How do they garner such a valuation? Tom McKenzie has the answers to this. Tom, this is the fourth bite at the funding cherry this year for Perplexity. Yeah. What's the potential here?
Yeah, look, Manus, their valuation, to that point, their valuation's gone from $1 billion this year to $3 billion, now potentially $9 billion US dollars. As you said, looking to raise $500 million US dollars. Interestingly, they weren't going out to investors saying, hey, we need to tap your funds. Investors went to them and said, do you have an opportunity for us to invest more? Apparently, they didn't need the extra runway, but they've taken it on. The conversations are there. They could, of course, those conversations collapse. It could lead to nowhere. But for now, what we know is those conversations are taking place with a potential valuation of $9 billion US dollars for this company that is backed, interestingly, by SoftBank, Amazon and Nvidia, with the ambitious goal of taking on Google search, Manus.
Again, the fact that people are going to Perplexity saying, can we get a bite of this, really tells us something, Tom, about AI. What does it mean of where we are in whether this is a real cycle or a hype cycle?
Yeah, and in terms of that enthusiasm, certainly from the VC community, Danny, it is still there. And $500 million being raised by Perplexity potentially is nothing compared to the $6.6 billion that OpenAI raised earlier this year, with that $157 billion valuation, of course. So it shows that appetite, particularly amongst venture capitalists, is still there. Perplexity, they've updated. They have additional services. They have the free app. They have the paid-for app. It's a search service that you or I can download onto our phones. They also have one that is more geared towards corporates and companies. It allows them now to do things, for example, search some of their internal records, if you're a customer, alongside searching the internet. So they have that capability. Also, for those looking for financial information, you can pull up things like stock prices and earnings information as well for some of their paid-for products. So they've tried to update, they're trying to get ahead of this and trying to build out more products. But to the broader point around that VC appetite for some of these AI services and platforms, it clearly is still there.
Yep. Well, they certainly, they're moving along with their revenues, aren't they?
Tom, thank you so much. That is Bloomberg's Tom McKenzie for the latest on Perplexity. Okay, as we take you out, just a quick look at Brent this morning, moving higher by more than 1%, also pushing yields higher. Yields and oil been closely tied these days, Manus.
They are indeed. I mean, oil did get trashed last week, down 8% in the week. We need to understand, as Dan was just saying, what is the calibration of the response to Iran? It is the question for the oil market and beyond.
From our global headquarters in New York, welcome to Bloomberg Brief. I'm Danny Berger, alongside Manus Cranny. Let's set your agenda.
Bracing for volatility, uncertainties around earnings, geopolitics, and the U.S. election keep markets on edge. A red line has been crossed. Israel doubles down on its plan to hit Iran after an assassination attempt on Prime Minister Netanyahu. And Boeing and its workers agree on a tentative deal with another vote scheduled alongside its earnings this Wednesday.
Well, it's starting out quiet this morning. How long does it last? S&P and NASDAQ futures lower. It is another day of Russell 2000 outperformance. That was the theme for last week, too. At the 6th consecutive weekly advance for stocks, the first since 2024. 47th all-time record on Friday. Pick whatever superlative you want.
Effects.
Oh, yeah, you need to unleash the trumpets, man. It's balloon drop for yields. It is a move modestly higher, likely due to what oil is doing. Your 10-year yield up nearly 3 basis points. Oil up more than 1%, 1.3% this morning. It's nudging higher after an attempted attack on Netanyahu, the foreign minister calling it crossing another red line. Gold, you can see there, also goes to another record. So that's where the action is this morning. Elsewhere, are we just in the eye of the storm, Manus?
Well, we're counting down. I mean, the whole debate that we're having around this desk is how much can you really rely on the betting markets?
Yeah.
Everybody's writing about them, but the veracity of some of those stats is pretty stunning, isn't it?
Yes, I think this is so interesting because your point is entirely correct that this market has been moving on red sweep. Last week it was small caps, it was dollar, it was crypto, all doing well because betting markets were pricing in more Trump. But this is the stat from the FT, Manus. $300 million in trades on Polymarket were done by 4 accounts, and they helped swing the bets by 10 points this month. So how much can you really read into it?
Well, look, also it's the group of people who are on those markets. I mean, if you want to understand groupthink, you just got to look at the kind of people who are actually betting on that. But then you go back and you look at Hartnett's note from Bank of America, and it does talk about a mimicry of 2016 when there was a shift. There's a shift in the thinking. There's a shift in the preparedness for the outcome. And you can't really deny that in terms of the flow. And there was, look at the banks. The banks, I mean, they've had good NIMs, but they are just barnstorming ahead.
Yeah, it was a big week. But, Manus, I really love what Lori Calvasina of RBC writes around the election. What is the risk? Let me take you to her note specifically. It's only now 15 days from the election. She writes, the thing that may matter most for U.S. equities, for 2024 at least, is simply getting past the event so that companies and investors know what they are dealing with. I'm pleased to say that Lori, head of U.S. equity strategy at RBC, joins us now. Lori, this is great because we've literally been wringing our hands around what's going to happen, how do we price it in? But you say it's just about getting to the event itself.
I think that's the major thing. Obviously, I actually agree with you. I do think that we're starting to see hedge funds in particular put some red sweep bets on. You know, I've seen small cap positioning go back close to 2016 type highs. We're seeing the dollar, regardless of what you think is moving the betting markets, the dollar is starting to move in line with the betting markets. Banks' performance has been inversely correlated with betting markets. But look, I think that we did a survey back in September that was focused on policy, not personality, but policy. And we really asked our analysts to put pen to paper and say, what's the implication for your industry outlook if we get the red sweep, the Dem sweep, one of the two winners with a split Congress? What was fascinating to me about that is that there were tilts. So the Republican sweep got a bullish tilt, the Democratic sweep got a bearish tilt, but these were very, very slight. And just to give you a sense of the numbers, I had my analysts score everything on a scale of +2 to -2. So +2 very bullish, -2 very bearish, 0 is neutral. If you're bullish or bearish, you just get to pick a 1. There are no half-point selections in this survey, even though some of them try. But the reality is when I forget the exact number, but I think under the Republican sweep, the average score for U.S. industries was like 0.38, so it didn't even get to 0.5. On a Democratic sweep, it was -0.24. So these, if you looked at it sector by sector, right, financials and energy were getting the biggest sort of endorsements of this really matters and stronger views. But outside of that, it was a lot of like neutrals, conflicting cross currents. I don't know that the policy implications, as divisive as this election is, it may just not be as meaningful for Wall Street as we think.
So look, we get a frenzy every day over whether it's the betting markets or the red sweep or another note from another house. But when you look at the nuances there has been a very aggressive move in financials, less so in energy. I think what's interesting, the question then becomes a 27% ramp in the KBW relative to a 9% rise in the energy sector says to me that there's more breadth in energy than there is left in financials. Is that a fair estimation, breaking the market down?
So, what I think is interesting, if you look, and I actually spent some time aside from the survey just looking through the policy speeches, the stuff on the campaign websites, the official policy documents they've put out. And I actually did feel like energy was one of the clearest big chasms. And if you actually look when Harris was surging in the betting markets and the polling data in August and September, what we actually saw was energy was the most inversely correlated sector with the Harris-Trump spread. So, even though it's not really reacting recently to this surge in Trump, right, I do think there was, perhaps a bit of an impact back then.
Okay.
On financials, I think it's really interesting as I talk to investors, and I think I'm in the minority on this. My analysts feel very strongly that a red sweep is positive for financials and a Democratic sweep is negative. And that really, if you look at because I made them put policy down on paper, right? I made them say exactly.
Strict.
I was actually, and a lot of it has to do with regulation. And when I talk to investors, even on the long-only side, who I think are taking more of kind of a wait-and-see long-term approach, they agree with my analysts. I will tell you, I barely found financials mentioned in any of the policy documents that I looked at. So I'm not saying there's not a real connection here, but it's just not what the candidates are really emphasizing.
So it's about getting to that date and then being able to analyze it, though. What if we get to that date and it's days after and we still don't know what the outcome is?
So I believe last time we didn't get the results official until Saturday. And the market kind of moved through that, right? If you look back at 2000, and this is the example I keep, putting in front of people, because if you look at seasonality, right, in recent decades, we followed a pretty similar pattern where we have kind of a spring sell-off, we have a bit of a pullback in the fall, and a rally after the event. Obviously, that's not happening right now with the kind of pre-election sell-off. But if you look at kind of each individual year, most year we have some version of that pattern. One year where we didn't was 2000. So we didn't actually have our typical sell-off heading into the event. It was just a year that marched to the beat of its own drummer. But we didn't actually see that get decided until I think Gore conceded in mid-December. And it got kicked up to the Supreme Court. And, they settled it a little bit before that. But we didn't get our typical post-election pop. And I don't know if that's because we didn't have the normal seasonality going in or we had sort of the uncertainty lingering after. But markets don't like uncertainty.
But this market is beating to its own drum, to its own tech drum. We even had Carson Block a little bit earlier saying, hold your nose and just buy. And that's from the arch seller in these markets. When you look at the earnings expected from technology, again, we're looking at a fairly strong earnings outlook for Mag 7, up 18% in this quarter. And double digits, 25% for next year. That is the beat of a very different drum, irrelevant almost to politics.
Yeah, and we do see that earnings are coming in pretty strong so far, although I would say some of the headline stats are a little bit squishier than the market action belies. Like I think financials have had a really good start to reporting season. We've seen their growth expectations for next year rise on consensus estimates. If you look at sort of the Mag 7, I think we still have a little bit of a conundrum there, which is earnings growth is expected to be quite strong and stronger than the rest of the market, but is also also expected to decelerate from these astronomical highs that we've been at. And the rest of the market is really trying, but just can't quite, match it and overtake it. And I think that's why we have all these fits and starts and all these head fakes on this rotation trade. So we're watching that in the next few weeks, but so far the Mag 7 is holding on.
Well, to that point, you've done some really excellent work on the tie between utilities and AI at this moment, how they've almost become an AI trade. Manis and I have asked people about this, and it's almost as if they're everything to everybody. When they want it to be a defensive trade, it's a defensive trade. When they want it to be an AI trade, it's an AI trade. At what point do the two become so convoluted that utilities just necessarily has to sell off when big tech comes under pressure?
I think it's fair to assume that, it's sort of gotten caught up in this theme. So as that theme comes under scrutiny, it's going to get some extra scrutiny as well. And look, I'll tell you, we downgraded this sector recently. We'd been overweight. We went overweight back in January. We did not have AI on our bingo card for this sector at all. What we saw was that valuations looked not super cheap, but like decently cheap. And the earnings revisions were pretty strong. And the flows then started to come in over the summer. We saw a lot of passive money go into the space. Well, guess what? Now those valuations don't look quite so cheap. Many weeks when we put it out in our weekly, it's sort of in the red, so it's expensive on an absolute and a relative multiple, and the flows have started to trip up. So, for me, that was enough. We got lucky. We pulled our overweight off.
A very honest reconciliation there. When the flow changes, you change your mood. Laurie, thank you very much. Great table setting, 15 days to run. Let's see where we get to on this election. Laurie Calvasina there of RBC Capital Markets. Coming up with Danny and I. You've waited for this. Boeing sees a deal on the table with its biggest union. Will it get ratified? More on the plane maker next, right here on Bloomberg Brief. Good morning.
What you see in my opponent, a former president of the United States, really is, it demeans the office. And I have said, and I'm very clear about this, Donald Trump should never again stand behind the seal of the President of the United States. He has not earned the right. He's not earned the right. And that's why he's going to lose.
Well, it's getting personal now. The Vice President, Kamala Harris, there speaking on MSNBC. We're 15 days out from the election. The Democratic nominee predicting that her rival's vulgar remarks will be what makes him lose the race. And that is still very tight, depending on which polls you look at. It is neck to neck. Joining us now is Bloomberg Government's Jack Fitzpatrick. Jack, it's interesting where both candidates were over the weekend. In Georgia, obviously incredibly important. The black electorate there is a third of the eligible voters. And Trump lost this by less than 13,000 voters in 2020. What was the message in Georgia, and how important was that as a venue for Harris?
I think the part of the message was also relayed in that MSNBC discussion, talking about just the weight of the election. There's not a new message from either candidate right now breaking through that seems like it's going to tilt undecided voters in some way that they haven't already been pushed. But Harris is responding to attacks from Trump, responding to some bizarre comments from Trump recently and some vulgar comments from Trump, and essentially trying to urge voters to get out and vote. That's the stage of the campaign we're at right now, is trying to motivate your supporters, motivate anybody who might be on the fence about whether it's worth showing up to vote, and trying to hit the key battleground states, as you mentioned, in Georgia, and then upcoming Pennsylvania, Michigan, and Wisconsin, all on the list for Harris, and we just saw Pennsylvania for Trump. So just trying to connect with people and motivate supporters as much as possible right now.
Yeah, and Trump's way of doing that, going to McDonald's, putting some fries in the fryer, or I guess you put potatoes in the fryer and they come out as fries. Anyway, Jack, besides the point, we are 15 days away, as Manis mentioned, and there are basically no high-quality polls coming out from over the weekend. Just this month, Pennsylvania has had only 2 polls come out, the crucial swing state with rigorous methodology. How much do we actually understand how close this race is and where the balance of power is tilting?
We understand enough now to know it might as well be neck and neck. There is some uncertainty in the polls, so I can't guarantee the results will be as close as they look in the polls. But the polls are close enough to know that we don't know who's going to win. It's essentially a toss-up. And to be honest, at this point, a lot of additional polling between now and Election Day, when some people are already starting to cast early votes, probably would not have a huge impact on the voting averages. So unless there is a major event that warrants a fresh look at the polls in certain states, we pretty much know where this race is. And the bad news is what we know is that we don't know who's going to win. It looks like a very tight, unpredictable race. Not very much could possibly happen to change that outlook at this point.
So what does the schedule look like over the next 15 days, Jack? Let's just break down this week. You look at the operation of the Harris campaign, and it is door-to-door, knocking, personalized, versus Donald Trump, perhaps vicariously via Elon Musk, offering voters sign on and you can go into a lucky draw. The logistics of this campaign are very different for both sides. So how does the week look?
Yes, we know the logistical approach of a Trump campaign because he does rallies. This is how he motivates his base. This is how he communicates. It would be surprising for him to change from his usual tactic of holding large in-person rallies in key states and sometimes in non-key states, sometimes where there's a down ballot race where he's trying to help a House candidate or something like that. Harris is a little more unpredictable. We're obviously seeing her campaign in person quite a bit. There is the question of to what extent her financial advantage can help her between now and Election Day, where she chooses to spend that cash advantage to go on TV. The swing states are obvious, but the exact strategy we don't know for just the last few weeks here in terms of how Harris can, in addition to in-person events, take advantage of her cash advantage over Trump on TV. That's one interesting, outstanding question that we'll learn.
Jack, appreciate it. Thanks for getting up early for us. That is Jack Fitzpatrick of Bloomberg Government. Okay, we're keeping an eye on Boeing this morning. Boeing shares climbing in the pre-market trade this morning, up 3.9%. The plane maker and its biggest union workers have hammered out an accord. It includes a wage increase that's 35% over 4 years. It is tentative for now. A ratification vote is set for this Wednesday, the same day as Boeing's earnings. Let's bring in Benedict Campbell, our global editorial leader in aviation, for the details. Benny, how close are we to a deal?
Well, potentially Wednesday night is when we'll find out. I mean, we'll certainly find out on Wednesday, one way or the other. But the optimism is there, and you see it in the stock. It's up quite substantially in pre-market trading this morning, and people are looking at the offer that's on the table now. 35% wage increase. We've come from 25 originally, then 30, now 35, and a couple of other sweeteners thrown into it. There's a signing bonus. There are a couple of things on the retirement front. So overall, a fairly comprehensive and, dare I say, attractive package, and sort of the unscientific view from the online forums shows that there are actually more people now who are pro than might have been previously. Previously, the mood was very much, let's fight this out, let's stay in the race until we get something that's substantially better. Now we're getting more voices from workers saying this doesn't look so bad. So on Wednesday is when we'll get the vote. That'll happen while the company reports its earnings, so it'll be a very long and potentially tumultuous day for Boeing. So the earnings come out first, then the vote, and then the result of the vote is in the evening on the West Coast, so that'll be in the middle of the night over here, and Thursday, the Asian morning. So we're talking at sort of looking at 24 hours of pretty comprehensive action on the Boeing front.
Well, it's certainly going to be a piece of theatre for the CEO, Kelly Ortberg. The chances of success, Boeing has gone directly to the unions. They've made a couple of overtures in the past, and of course, a spectacular failure of negotiation last month. How do we rate the chance of getting this over the line?
It's actually looking pretty good, and there's a number of things going for a positive vote this time. Number one, we've had the White House involvement now. That's a sort of a new nuance that's come in. Previously, the White House, at least as far as we could tell, was staying out of it. But last week there were some movements. The Labor Secretary was in Seattle and was speaking to both sides. President Biden sent a statement over the weekend saying he believes in this kind of collective bargaining agreement, and there's generally probably a sense of fatigue out there in terms of getting this over the line. So it's looking pretty good right now, but we'll see on Wednesday.
Well, the cash burn has been considerable, hasn't it? The free cash flow, $1.3 billion. Benny, thank you very much. Benedict Hummel there. Tracking the Boeing story. We'll have more of that through the morning and the next couple of days from New York and beyond. It's your Monday morning Bloomberg Brief. We're back together. Manus Craney, Danny Berger in New York. Keep calm and buy US stocks. Carson Block's betting on some of the biggest names in the S&P 500 will benefit from retirement fund inflows. Let's take a listen to an exclusive interview with the Muddy Waters founder and CIO.
There's a debate as to what really drives, when you talk about the US market, especially the S&P 500 or the Mag 7. I'm in the camp that, although I don't have the facility with math to really try to prove this out, but I'm in the camp that believes that what drives that index are flows. And so at the end of every month, US workers, a lot of them, their paychecks go into their 401ks, which are retirement funds, and there's a robo bid for these stocks. And what happens is you reduce the effective supply of stock because you're taking out the active owners of stocks that will decide, hey, at this price I'm a seller, at a lower price I'm a buyer, and you're replacing that with a holder that will never sell unless and until it has outflows because people are drawing down their retirement accounts. So according to that view, as long as the labor market is reasonably strong in the US, which it is, you're not going to see outflows. You're just going to continue to see inflows, especially in those, in the most heavily weighted names in the S&P 500. So I have, in the past few years, I have looked back on my career as an activist short seller and, kind of done the math and felt like, well, I probably could have just been levered long the S&P 500, deferred my taxes, and gone through a lot less BS, and be in more or less the same position financially. So, I mean, that does make the market more fragile, but there's a Fed put, there's always a Fed put. Does there come a point in time when the system breaks and the Fed can't fix it? Theoretically, yes. In our lifetimes, I don't know. So I think for now, it probably just pays not to think too much, just close your eyes and buy, probably Mag 7.
That was the Muddy Waters Capital founder and CIO Carson Block speaking exclusively to Bloomberg's Haslinda Aman. How many people feel this way, Manus, that there's so many risks between an election, a Fed, geopolitics, yet sentiment has been off the charts and the S&P 500 keeps hitting new highs? I
think it goes back to what Laurie Calvasina said. It's sort of, you get through this election, stocks, the bias, everybody's saying, the negativity, if there's a Harris victory, etc. It's perhaps a little bit overstated. And likewise, on the red sweep, a little bit overstated on the upside. But Carson Block, I mean, there's an admission for you, for the art short seller to say to the world, do you know what? I should have just, maybe bought the Mag 7.
Yeah, not a ringing endorsement for active management necessarily. No. Okay, Manus, let's quickly set you up for this week. We're going to have the IMF and World Bank kicking off its annual meeting in Washington today. Tuesday, ECB President Christine Lagarde sits down with Francine Lacqua for an exclusive interview. Wednesday, it is Tesla and Boeing. So, Manus, if you're looking for more risk events to spice things up this week, you got plenty.
We got plenty. Let's see what Lagarde's got to say. I mean, you just look at some of those growth numbers out of Europe, and they're pretty tragic on the way forward. We're back together. We're reunited. We're going to take you all the way to the US election on Bloomberg Brief every day, yeah?
We'll do our best.